Live, I'm Josh Fenton, CEO and co-founder. Thanks so much for joining us on this spectacular summer day. I did not look at the Giorsi factor yet today. Yesterday was a 10, it's gotta be about a 9. I wanna go right to Robert Rutley. He is the man at our friends at Mott Chace, Sotheby's International. He's with the Blackstone team. Robert, thanks so much for taking the time.
Thanks for having me here again, Josh.
Robert, kind of big news this morning, 8:30. The CPI, the Consumer Price Index, was released. It showed inflation at 9.1%, the highest level in 40 plus years. And one of the key drivers in pushing up inflation was rental costs. The Fed, which has already pushed up interest rates, is expected to push them even higher at the September meeting. They're talking about the word on the street, and I mean Wall Street, is that it'll be another 75 basis points, thus increasing the difficulty and the cost of buying a house, pushing more people over to rent. Tell me how this works. This is macro. You went to Michigan. This is macroeconomics far beyond my pay grade.
I didn't take a lot of math classes at the University of Michigan, so maybe macroeconomics is not my forte. But I can tell you about real estate. It's almost, I am not an economist. It's almost like the Fed is trying to figure something out and they don't know the whole picture. Real estate is driving inflation for sure. Because people are competing for properties, and those properties are bidding way up and above what they listed for. So the prices have been growing over the past 5 years, not just the past 2 years that we've seen, huge increases. But that's because there's no supply. We have a million millennials out there, 25 to 35, looking for their first home, and there's nothing to buy. So housing is definitely a shortage there. But if we're raising interest rates, it makes it more difficult for people to purchase homes. And investors that are buying multi-unit properties at higher interest rates are going to pass on that extra cost to their tenants. So not only is this knocking quite a bit of people out of the housing market, the ones that need to have mortgage lending and have tighter budgets, but it's also going to be pushing people out of the rental market as well, because they won't be able to afford the new prices for a lot of multifamily housing or tenement housing.
Yeah, I mean, absolutely. You're starting to see contractions. The mortgage bankers track week by week as to how many people are filing applications for mortgages. I think week over week was down almost 2%, 1.79 or something like that. Are you seeing it, or is it in the sandbox you play in, primarily on the east side in Providence? Are so many of your buyers cash buyers that mortgage application number may not be particularly critical to what you're doing?
Well, if we're working with cash buyers, they're not competing with the other people that are using mortgages as much as they were last year. So that means they're paying less, and that means they're not, they're not moving quite as fast, and they're able to think things through. So they're making really good decisions, and I'm a fan of people making really good decisions when it comes to real estate. The huge investment and moving too fast can bring up too many regrets. So while we may be seeing less people taking out mortgages because they're at the top of their budget or their budget is shifting to a lower point, that doesn't really affect directly people who are paying cash. Indirectly, there's less competition, which stops that price growth.
Okay, so interest rates have been going up, so we would think that the normal reaction of the market would be, gosh, houses are on the market longer, there's more houses, there's more availability, prices are starting to go down after these interest rate increases. Are we seeing any of those market factors?
Prices are not going to go down, Josh. I think what we're seeing is that, there's definitely more houses on the market because there's less competition. And I think that this is a market that professional real estate agents need to really, to work in to get things done successfully. Over the past 24, 30 months, we've been seeing a lot of agents that are pricing properties aspirationally. They're saying, hey, I know this is a $400,000 or a $500,000 house. Let's see if we can get 700 for it, because pretty much people were buying anything. They're not getting 700 anymore. The most important job that we have as real estate agents is to price a property correctly so that it sells quickly at its highest price. And if you're not doing that, you're not doing your job. And we're seeing a lot of that right now. For instance, Elmhurst used to be a neighborhood where the highest price points were around $325,000. It was like that for years. Last year, Elmhurst had a big blow up of interest. People were selling properties really quickly. People were buying properties really quickly. And the numbers were just coming out of the air. So $400,000, $500,000 properties that are, we're talking 1,200, 1,600 square feet homes, selling very quickly with competition. But now I see that there's about 27 properties on the market in Elmhurst today. And some of them have been on the market for more than 10 or 12 days.
Let's go to the east side of Providence. We always like visiting over there. Usually, as houses go on the market, they seem to get plocked up pretty quick. How many houses are on the market right now on the east side of Providence?
There are 10 houses, and there are 6 under $1 million. And not all of those are moving quickly. Some of them were listed today. Other ones have been out there for a little over a week. And we were seeing in the past year, homes sold or under contract within 72 hours.
So how slow is slow? In the olden days, when I used to buy and sell houses, things were on the market for 90 days, 120 days before they got repriced. What's slow now?
I think we're moving from a very hot seller's market to just a regular seller's market. Sellers still have all the control. Sellers can still price their properties correctly and expect that they're going to get multiple offers. This is a house-by-house situation. The house needs to be turnkey or has to have that potential for value growth. But homes that don't fit that bill are going to sit up there for a little while.
What do you see outside of Providence? Are we starting to see any, I don't want to call it seismic shifts, but even any incremental shifts, one way or the other, in pricing, inventory, affordability? What's taking place?
Over the past 2 years, we're seeing a lot of places, little bedroom communities in Cranston, like Auburn or Eden Park, that had some activity. Maybe there were multiple offers because we were still in a somewhat of a seller's market before the COVID shift. But I think we're moving back into just a straight seller's market instead of a very hot seller's market. So homes that were selling for $260 to $280 are selling for $325, $330 if they're turnkey. If they need work and somebody's just slapping a $330 or a $340 or a $350 price on it, they're not selling. They're out there. So I think that's happening in most neighborhoods in Rhode Island, except for those very hot neighborhoods. The hot neighborhoods, they are slower, but I would shift them still towards a warm seller's market, not a cool seller's market.
The main numbers for the median single-family home was, I want to say it was $419 the previous month, $420. So functionally no change. The Rhode Island Association of Realtors will have their numbers out next week. I think it's Monday or something. Maybe it'll come out Friday ahead of the weekend. What do you expect with those numbers? Are we going to see any movement of any significance?
I don't think there's going to be any significance. I mean, it might go down a little bit. It might actually go up a little bit because our inventory and our sales have been a lot lower than they were this time last year. So the inventory that we have now, it's less than we've been selling, and then when you take some buyers that need that mortgage and have been pushed out of their value range out of the market, then there are still more homes out there that aren't selling. So I mean, there's less competition. I think we're going to look at more of a seasonal sellers market that we've had. I'm going back probably 4 years. The last time I think I remember a really seasonal sellers market where after July 4th, it's going to be quiet for a little while. It's not going to pick up until September. Holidays, it slows down, and the spring is our big selling season again. It shouldn't have to be that way, but here's what happens is that when it's slower and there's less competition with buyers in the summer, if you're a buyer, this is a prime time for you to get a house that you want. And if you're a seller, people that are out there buying are people that are really buying houses. They're not kicking tires.
So the Massachusetts market we look to a lot. We had a piece, I don't know, about 10 days ago on looking at the median household price, Massachusetts statewide, as well as the Boston metro area. You know, statewide prices, so that includes Fall River and New Bedford and Lawrence and Lowell and Pittsfield, Mass, and these are not high income areas. These are kind of, you know, lower middle income communities. But if you take across the median price is like $560,000. It's a good, you know, more than 40% higher than what's going on in Rhode Island. That seems to continue to drive Massachusetts residents who have the ability to work at home, to have flexibility of what their commuting is, down to Rhode Island more and more.
Yeah, it's true. You know, there are some great opportunities still in Massachusetts, but I think, you know, if you're looking at the greater Boston area, most people are priced out. And that's why we have a lot of Boston commuters down here in Rhode Island, especially if you can walk to the train station or you can get to the commuter train pretty easily. We have a lot more value for a much better price.
What do you think the fall is going to look like? You're going to have interest rates probably up, according to the Fed. All indications are up 75 basis points, as I had mentioned. So we're going to be over 6% on a traditional 30-year mortgage. But we may see some significant inventory because prices are so significant.
Yeah, you know, over the past 30 years, I think the average mortgage rate was around 5.5. So we're slightly above that. It's nowhere near the highest mortgage interest rate that we've had. I think in the 70s and 80s, I think we're hitting you know, 20 or close to 20. So here's what's going to happen: people that need to buy are going to buy. People that need and want to sell are going to sell. So there's still going to be a very active real estate market. There's not going to be a lot of opportunists out there who say, hey, listen, I'm going to take the equity up out of my house. I'm going to buy this other house over here. Or you're not going to have a lot of investors that are using mortgage lending, you know, purchasing a whole bunch of homes because it's dirt cheap. So things are going to slow down a little bit, but I still think that there's going to be a quite active buyers and sellers market. And I think it will be a sellers market for quite a while. I would see probably, we'll know in September what the rest of the next year is going to look like.
Is there one benefit to all this turmoil, which is it takes the house flippers out of the market or decreases the number of them? Because the potential of where the market going is not so clear in the short term.
You know, I think over the past couple of years, there's actually been less opportunities for house flippers, which is fantastic. I think that a lot of buyers have opened up their eyes for the opportunity of adding value into homes that need some updates, because that's where they could compete and that's where they could get a house. So I think there's a lot of you know, there was a lot less opportunity for flippers in the past. I think that's going to start opening up a little bit more. I hope that house flippers, and if you're listening right now, get away from the gray. We don't want to see gray houses anymore. It's just it's killing us over here. So, hire a design consultant.
Robert Rutley, as always, thank you so much for taking the time and for your insights into what's going on in the real estate market. For everybody else, stay tuned. There's a lot of numbers this morning. Both the federal inflation numbers off the CPI that came out at 8:30 this morning, and just half an hour earlier, GoLocal had it up, I think, just about right at rocket time at 8 a.m. Rhode Island ranks 46th in the country, according to CNBC's rankings of best states for doing business. So take a look at both those numbers. We'll have a lot more throughout the day. And most importantly, numbers are starting to creep up across the country. Deaths are starting to creep up for the first time in about 45 days. If you haven't gotten your booster shot, it might be the most important thing you can do to stay healthy, stay in the economy, be able to buy a new house, be able to sell your old house, get that booster shot and stay healthy. Thanks, everybody. Enjoy this great weather and stay tuned for much, much more today. Thank you.